What's driving markets? Welcome to Market Take. Each week we'll bring you our insights on the latest market and economic trends that are impacting investments. I'm your host, Bruno Rovelli, Chief Investment Strategist for Italy at the BlackRock Investment Institute. This week, we dig into some of the bright spots in Europe and what we think needs to change for us to turn more bullish. European equities had their moment early this year and even outperformed US stocks. We see some bright spots today, but also think the region needs more structural changes to sustainably outshine the US. European stocks had their best relative performance since 2015 in the first quarter of this year. Economic activity has proved resilient too, but this has not been enough to keep European stocks going. They have since given up much of their relative gains and now sit roughly in line with US stocks. Valuations are attractive. Today, every major European sector trades at a discount to its US counterpart. However, to take the lead over US, we think Europe needs more business-friendly policies and deeper capital markets. We think removing the internal barriers that limit companies' ability to scale across the continent and loosening regulations could help improve returns. More flexible fiscal rules mean governments can stretch spending plans over longer time horizon, especially if they are tied to structural reforms. So fiscal policy can serve as a tailwind for growth, both in the short and medium term. We also think Europe must deepen and integrate further its capital markets. Europeans are big savers. However, they keep about a third of household financial assets in cash and deposits, versus just 17% in the US. More cash invested in risk assets could create a positive feedback loop, where wealth creation increases European spending and boosts GDP. It could also help reduce Europe's valuation discount versus the US if markets believe growth can be structurally higher. For now, we think investing in Europe is all about selectivity. Our preference for financials, utilities, and industrials has played out well this year. We still like the former two in the near term and the latter for the medium term. Healthcare also looks attractive. Cash flow generation is strong, and the sector might be an early beneficiary of AI adoption. Longer term, we also see potential for Europe to benefit massively from AI once the build-out phase shifts to adoption. We also look for opportunities in defense and industrials, as geopolitical fragmentation drives investment in these sectors. Here's our market take. Europe needs to redouble efforts to fix structural issues if it wants lasting equity outperformance. For now, we're focused on select sectors like utilities, healthcare, and financials, but keep an eye on defense and AI opportunities longer term. For details, read our weekly market commentary. Go to www.blackrock.com/weekly commentary. Thank you for tuning in. If you have enjoyed this episode, subscribe to Market Take wherever you get your podcasts.
This material is intended for informational purposes only and does not constitute investment advice, a recommendation, or an offer or solicitation to purchase or sell any securities, funds, or strategies to any person in any jurisdiction in which an offer, solicitation, purchase, or sale would be unlawful under the securities laws of such jurisdiction. The opinions expressed are as of the date of publication and are subject to change without notice. Reliance upon information in this material is at the sole discretion of the listener. Investing involves risks. BlackRock does and may seek to do business with companies covered in this podcast. As a result, listeners should be aware that the firm may have a conflict of interest that could affect the objectivity of this podcast. For more information, visit blackrock.com/thebid.